guys. Is it clear now? Can you please confirm if it is clear now? Can you hear me, guys? Come on. Can you hear me now? Wonderful, wonderful, wonderful. Okay, so today we'll be conducting the basics of ACCA, FR, and SBR. Okay, we'll be conducting the basics of basics. Okay, so now whatever I am teaching in the today's class are just the base or the building blocks for our subsequent classes. Now, whatever I will be teaching in the today's class, I will be repeating each and everything in the going forward classes. So then basically what I mean to say is whatever I will teach in today's class, I will teach it again in subsequent classes. Then sir, why are you teaching it now? Because these are the few key terminologies which I will be using in every class of mine. Okay, in every class of mine. So I don't want you to face challenges. What exactly is the meaning of this? For example, if I'm saying financial statements, so when I'm saying financial statements, you should understand what is the meaning of financial statements. Okay, when I'm saying an asset, when I'm saying a liability, when I'm saying an income, expense, equity, okay, you should understand the meaning of it. Okay, when I'm saying a profit or loss, when I'm saying other comprehensive income, when I'm saying a reserve, when I'm saying an asset, you should understand the meaning of it. The whole intent of this class, the whole intent of this class is building the block, building the blocks, building the blocks. Okay, so now in this class whatever we are studying will form the base of FR and SBR, will form the base of FR and SBR. Now from the subsequent classes we'll start studying the standards. Okay, we will start particularly with IAS 16, that is property, plant and equipment. Followed by that we'll study IAS 23, then IAS 40 on intellectual property, and then subsequent standards. Okay, as per the planner, as per the planner. Now, so today we will be studying the basics of financial reporting and strategic business reporting paper. Okay, just the basics of it, just the basics of it. Okay, so let us study the same. Okay, but guys, understand, you might think, oh sir, this won't be tested in the exam. Is there a need to study this one? There is a need to study this one. Okay, because if the base, the foundation is not strong, however building you make, it will not be strong one, right? However good infrastructure you make on that building, on that foundation, it will not be a strong one. So the base has to be the strongest one. So that's what we are doing, the base strong, we are doing the base strong. Okay, now point number one, meaning of financial statements. What exactly is the meaning of financial statements? What exactly is the meaning of financial statements? So basically financial statements, the financial statements are the set of books of accounts. When I say financial statements, it means the set of books of account which comprises statement of financial position, which comprises statement of profit or loss, which comprises statement of changes in equity, which comprises statement of cash flows, which comprises notes to accounts. So what are the what are the five components of financial statements? Can you please tell me what are the five components of financial statements? Statement of financial position, statement of profit or loss, statement of changes in equity, statement of cash flows, and notes to accounts. I believe the five components of financial statements are clear to all of you. Okay, now understand, how is a financial statement prepared? How exactly is the financial statements prepared? So financial statements are prepared using the international accounting standards and IFRS, international accounting standards and IFRS. Now guys, understand, many a times I come across a query, sir, I understand, many a times I come across this query, sir, what is the difference between this IAS or IFRS? Tell me, do you still have this query going on in your mind? Do you still ask this query? What is the difference between IAS and IFRS? Sometimes we use IAS, sometimes we use IFRS. What exactly is the difference? So let me explain that. First of all, the full form of it. IAS means International Accounting Standards. IFRS means International Financial Reporting Standards. International Financial Reporting Standards. Okay, so this is the full form. Now let us understand the meaning and the difference of IAS and IFRS. Guys, okay, first of all, understand that they are standards. What is the need of an accounting standard? What is the need of an accounting standard? Think of a situation. Think of a situation. Let's suppose there are two companies. Okay, let's suppose company A, and this is another company called as company B. Both the companies, both the companies are into real estate. Both the companies are into real estate. Both the companies are into real estate. But what happens? Company A recognizes revenue when a flat is sold. That is, when agreement is signed. When agreement is signed. Whenever the agreement is signed with the customer, company A recognizes the revenue at that point of time. But company B recognizes the revenue when the flat is handed over to the customer. Now what happens? Different company for the in the same industry for the same type of transaction are giving different accounting treatment. Tell me, can I, if this is the situation happening, can we compare company A with company B? Tell me, can I compare company A with company B to measure the performance? Can I compare that? No, I won't be able to. Why? Because they are following different accounting treatments. So there was a lack of comparability, and therein there arises a need of a accounting standard, so that company follows same accounting treatment for same transactions. Okay, so if there is an accounting standard, both the company will apply same accounting treatment. Therein there arises the need of an accounting standard. Okay, now see here. In 1973, just a minute. In 1973, there was set up a committee called as IASC by the name International Accounting Standards Committee, which set up IAS, International Accounting Standards, from numbers 1 to 41. Okay, in 1973 the standards were set up from IAS 1 to IAS 41. Now tell me, as the world evolves, the transaction that are happening also evolves with time. Tell me yes or no. Guys, I need all of you to be active on the chat box. Okay, now tell me, as the world evolves, there arises the need of evolution of the transactions, and there which requires the accounting standards to be evolved. right? So now what happens? What happened? These standards were not able to cater to the current transactions that were happening in the market. So now in 2001, in 2001, okay, IASC was re you can say ISC was removed and a new committee was set up, which was called as IASB by the name International Accounting Standards Board. Accounting Standards Board. Now what happened? So now what was the role of IASB was, as and when the need arises, okay, as and when the need arises of a new accounting standard, so they started setting up new accounting standards, or if there was a standard in IAS which was not catering to the current economic scenario, then they cancelled the IAS and replaced it with IFRS. So to give an example, there is a transaction called as leases. Earlier we had IAS 17 on leases, okay, but since IAS 17 was not able to fulfill all the requirements of the current economic scenario, hence IAS 17 was cancelled and IASB issued IFRS 16. IFRS 16 was issued. For example, for revenue recognition, earlier there used to be a standard called as IAS 11 and IAS 18 on revenue. Okay, now since these standards were not able to cater to the current economic scenario, hence they were cancelled and a new accounting standard by the name IFRS 15 was issued. Okay, so the earlier IAS starts to get cancelled one by one and we start to issue new IFRS. Okay, so now we can say that IAS and IFRS cumulatively can be called as IFRS. Okay, IAS and IFRS cumulatively are called of IFRS. Okay, for some transactions we are still applying IAS, for some transactions we are still applying IAS, for some transactions we are not applying IAS but rather we are applying IFRS. Tell me, are you clear on the meaning of IAS and IFRS? Is it clear to all of you? Come on guys, please tell me, is the meaning of IAS and IFRS clear to all of you? Now will you get confused in this one? I need response from all of you. Come on guys, I need response from all of you. Is it clear the meaning of IAS and IFRS? Wonderful. Now understand, financial statements is of prime importance, and being an ACCA student we definitely need to understand the preparation of financial statements, and that's why ACCA has kept this accounting paper at all three levels of ACCA. Okay, at all three levels of ACCA. Now Andrew has a query that no new IAS is created. No, now if any standards will be created, they will be created by the name of IFRS, not IAS. Okay, IAS was created from 1973 till 2001. Now subsequently no new IAS can be created. It will be created by the name of IFRS, not IAS. Okay, so now as of today, there are few IAS which is still existing and there are new IFRS as well. So both IAS and IFRS runs parallelly now. Both IAS and IFRS runs parallelly now. Yes, IAS for lease, that is IAS 17, is fully cancelled. Now IFRS 16 is in place. Okay. And I believe for both FR and SBR, I have given you that which IAS and which IFRS is there in your syllabus. Okay, I have already given that to you in my orientation. I have already told that thing in detail. Now understand what is expected out of you at FR level and what is expected out of you at SBR level. So let us understand that. Now I will start with FA. I will start with FA. So at FA level, what is expected out of you is you need to understand how to pass journal entries. You need to understand how to prepare ledger, how to prepare trial balance, how to prepare financial statements, single entity, how to prepare financial statements, group entity. This is what is expected at FA level. Now, when you reach at FR level, understand guys, how the things change at FR level. Do we need to pass journal entries at FR level? Yes. But then what is the difference between FA and FR? For the journal entries at FA level were very basic ones. At FR level, just a minute. At FR level, you are required to pass journal entries using IAS and IFRS. Okay. Ledger, not primarily trial balance, trial balance again not required at FR level SBR. Yes, the basic knowledge of trial ledger and trial balance is required. Yes, it is expected. The basic knowledge of ledger and trial balance is expected, but it won't be tested in the exam. They won't ask you to prepare ledger and trial balance. No, they won't. So I am striking it off. Now, will they ask preparation of financial statements? Yes, but basis the IAS and IFRS. Okay. Will they ask you for preparation of group entity financial statements? Yes, but basis the you can say IAS and IFRS. Additionally, they will also ask you for analysis of financial statements. Additionally, they will also ask you for analysis of financial statements. This is what is expected at FR level. Now, when I reach at SBR level, it will be expected that you have the knowledge. Of IAS and IFRS, whichever is applicable as of now. Not only knowledge, you should also have the skill to apply that knowledge. Application of knowledge. You should also have the skill to apply that knowledge to that given case scenario. Thirdly, you should also have the knowledge to analyze the financial statements. Analyze and interpret KPIs and financial statements. It is also expected that you see things from ethics point of view. So this is what is the difference of expectation that ACCA has at 3 different levels. Okay, at 3 different levels. So if you are an FR student, this is what is expected out of you, and if you are an SBR student, this is what is expected out of you. So don't need to worry. I will be covering each and everything in my classes. I will be covering each and every single thing in my classes in depth. Okay, so now tell me guys, can I move forward? Can I move further now? Okay, now moving further, what are the components of financial statements? So as I told, there are 5 components of financial statements. One is called as statement of financial position, which going forward you will see me calling it as SOFP. So I will not be telling the full name always in my classes, statement of financial position. I will be saying it short SOFP. Okay. Then comes statement of profit or loss and other comprehensive income, which you will find me stating as SPL in my classes or P&L in my classes. Okay. Now, Third comes cash flow statement, which you will find me calling it as by the name of cash flow. Then comes statement of changes in equity. Can anyone tell me? Can any one of you, come on guys, can any one of you tell me what do you understand by the term statement of changes in equity? What do you understand by the term statement of changes in equity? Can you please tell me, guys? Come on. What do you understand by the term statement of changes in equity? Now understand. I need space. I need space. Okay, I'll write here. Understand. This equity. Equity means what? Equity means equity capital. Equity means equity capital plus other components of equity. Plus other components of equity. Other components of equity. Okay. Now, equity capital, you very well know the number of shares multiplied by the face value. But what is the meaning of other components of equity? So the other components of equity, has, it has what? It has, you can say, retained earnings. It has retained earnings. It can have, you can say, revaluation, reserve. It can have any other general reserve. It can have, you can say, any other reserves, yeah, surplus. It can have any other reserves or surplus. It can have any other reserves or surplus. That is what is called as other components of equity. So now in statement of changes of equity, we show what is the movement of equity share capital during the year. What was the opening number of shares? How many shares did we issue during the year? How many bonus shares did we issue during the year? How many shares did we buy back during the year? How many right shares did we issue during the year? What is the closing number of shares? Okay. Now in statement of changes of equity, again other components of equity, we write retained earnings. So what was the opening retained earnings? What is the profit earned during the year? What is the dividend distributed during the year? What is the closing retained earnings? Okay. So now this is how we prepare statement of changes of equity. Guys, again I'm telling, the whole intent of this session is to make you familiar with these terms. Okay. Make you familiar with these terms. Guys, understand, for SBR students, I do understand that you would have heard these terms sometime or the other. But in my classes, I will assume that you don't know anything. In my classes, I assume that you have zero idea about the subject. Only thing I'll assume in my class is you know the basic rules of debit and credit and the basic journal entries. This is the only assumption I will make in my class. Rest everything I am going to teach from the very scratch. Okay, from the very scratch I will be teaching each and everything. Now, okay, now all these things whatever I'm teaching will be discussed in our class subsequently in depth. So now today we are just becoming familiar with the terms, that's all. Okay. Now coming to notes to accounts. So notes to accounts is nothing but it just elaborates or explains all these components in a better manner. In a better manner. This is what is called as the components of financial statements. Components of financial statements. Tell me guys, are the components of financial statements clear to all of you? Is it clear to all of you? Come on guys, please tell me. Is it clear to all of you? Come on guys, please tell me. Wonderful. Now moving on to the elements of financial statements. Elements of financial statements. Point number 3. Guys, just 1 minute before I move on to elements. Do you know this statement of financial position in our common parlance? What is we call it as? Can you please tell me? Statement of financial position in common parlance. What do we call it as? Can you please tell me? Statement of financial position in our common general layman terms. What do we call it as? Balance sheet. Very good, Hafsa. Very good, Hafsa. We call it as balance sheet. But will we say it as balance sheet subsequently? No, we will not be saying it as balance sheet. Okay. What we'll say? SOFP. Just to make you things relatable, I used these terms of balance sheet. But will we use this term balance sheet subsequently going forward? No. What will we say it as? SOFP. Statement of financial position. Statement of financial position. Okay. Now, understand one basic thing before moving to onto the elements. The basic thing, understand. Let's suppose this is a line chart. This is my financial year. Okay, it starts from 1st January 2025. My financial year starts. 31st December 2025. My financial year ends. Okay. Now, when I am preparing, so I will prepare my financial statements here. So when I'm preparing the financial statements, let's suppose I am preparing SOFP, statement of financial position. So now statement of financial position will show what is the balance, of asset, liability and equity. What is the balance of these? What is the balance as at 31st December 25? So SOFP is always prepared as at a particular date. As at a particular date. Okay. So now SOFP is as on this date. As on today, as of today, how much asset I have, how much liability I have, how much equity I have. As of today. As of today. So it is at a particular point of time. So understand, SOFP is at particular point of time. But when I say about P&L, so P&L talks about the treatment of all the income and expenses that happens during the year. Okay. So P&L talks about all the incomes and expenses that happens during the year. And that's the reason why we say P&L is for the year ended. For the year ended. For the year ended. Okay. It's for the full year. It's for the full year. It's for the full year. Now, statement of cash flows. It shows what are the movement of cash during the year. And that's why cash flow statement is for the year ended. Now, statement of changes in equity shows the movement in equity from here till here. So that's why statement of changes in equity is for the year ended. So understand here, I write it. SOFP is at a particular point of time. Okay, but statement of P&L is for the full year. Cash flows is for the full year. Statement of change in equity is for the full year. Are you understanding this fact? Come on, guys, tell me. Are you understanding this point? You might sound that, sir, you are going to a very basic level. Yes, I am going to a basic level, because these are the foundation. This is the foundation, and if the foundation is strong, the building which you prepare on that the building which you develop on that will definitely be the strong one. Now, moving on to the next part. The elements of financial statements. Elements of financial statements. So how many elements are there? There are 5 elements. There are 5 elements. Asset, liability, income, expense, equity. Or I'll say it like this. Equity will come up here, income will come up here, expense will come up here. Now, let us understand the meaning of the asset, liability, equity, income, and resource and expense. Okay, so understand one by one. What is the meaning of asset? What is the meaning of asset? So asset, the standard says asset is a resource. Asset is a resource. Asset is a resource which will give me benefits in future, embodying cash inflows, you can say, or you can say future economic benefits. Okay, which will give me, or I can say, I in simple language, which will give me future economic benefits, which will give me future economic benefits, which will give me future economic benefits. Like for example, if I have this laptop, it will give me cash flows in the future. Okay, it's an asset for me. If I have a receivable from someone, if I have a receivable from someone, so the amount which I will receive in the future will be my future economic benefit, Okay, now, so assets are a resource which will give me future economic benefit. Now understand one thing. How, see, let's suppose to purchase an asset, we have to give cash. To purchase an asset, we have to give cash. Now to do an expenditure also, we have to give cash. How will you differentiate whether the amount which I am paying, is an expense or an asset? Tell me. How will you differentiate when the amount which I am paying is my asset or my expense? So let's suppose if I have paid the amount and received the benefit right now, it's an expense for me. It's an expense for me. Like for example, okay, today I went to a restaurant and had my lunch and I paid the amount. I ate the lunch. I got the benefit. It's an expense for me. Just after having my lunch, I went to a laptop shop. I paid the money, bought the laptop. Now, this laptop will give me benefits over the next 3 years. So, they will give me future economic benefits. So, I have to recognize this as an asset and depreciate over 3 years. Now, this depreciation is my expense. Okay, so now I have to recognize it as an asset now. So whatever amount you spend, if it gives you economic benefits over the future, it's an asset. If it gives you economic benefit right now, it's an expense. That's the simple rule to differentiate between asset and expense, though I will be explaining multiple aspects of it going forward in my classes. But yes, just understand the basic of it. As I have told now before also, that this session is just to make you things familiar. Okay, now, what is your liability? So liability is your obligation. Liability is your obligation. Why obligation? Let's suppose I have taken a loan from bank. Don't you think I have an obligation in my head that I have to repay this loan? I have to repay this loan. So now it is an obligation which will be settled by outflow of resources. outflow of resources. It will be settled by outflow of resources. So it's an obligation which will be settled by outflow of resources. Let's suppose now understand, I have collected fees from you guys. So what do you think? That fees is my asset or a liability? Tell me, guys. I have collected fees from you guys. That fees which I have collected is my asset or my liability? Can you please tell me, guys? Come on. The fees which I have collected is my asset or my liability? It's my liability. Why? Because I have an obligation to deliver my lectures to you guys. Okay, so it is an obligation which will be settled by outflow of resources. What are the resources? My time. My time is my resource, right? So it will be settled by outflow of resources. Now, what is equity? What is equity? So equity is the residual interest in net assets of entity after paying liabilities. After paying liabilities. Let me explain this using the help of an example. Let's suppose I need two names. I need two names. So let us take Pramod and Devendra. Okay, now, so Pramod and Devendra. Okay, now during our classes, Pramod and Devendra became best of friends. They became best of friends. Now they told that, sir, we want to start our own business after qualifying ACCA. Okay, now we want to start our own business. Okay, so post qualifying ACCA, they started their business. Now to start their business, Pramod brought in $1,000 in the business, and Devendra also brought in $1,000 in the business. Okay, but there was a need of $5,000 in the business. So what they did is they took a loan from the bank. How much? They took a loan from the bank of how much? $3,000. They took a loan from the bank, and they started their business with a capital of how much? $5,000. Okay, now they did the business. Okay, now what happens is they did the business for, let's suppose, around 2 years. They did the business for around 2 years, and now something terrible happened. Okay, Pramod and Devendra fought among themselves. Okay, and they are like, no, we will not work together. Okay, now we will work separately now. Okay, fine. So now they planned that they will wrap up this company. They will wind up this company. The name of this company was PD Limited. Limited. Now they want to wind up this company. Okay, now while winding up, since there were a lot of thought differences between Pramod and Devendra, okay, the business was not running smoothly, and they incurred significant losses. Okay, and this $5,000 which they initially brought in the business, that became $4,200. That became $4,200. Because why? Because they suffered a loss of 800. They suffered, and it became $4,200. Now tell me, I am giving you options. Tell me, how will this 4,200 be settled to Pramod, Devendra and bank? Option number A. First of all, Pramod will take 1,000. Devendra will take 1,000. Priority number 1. Okay, and the rest bank will take up. How much? 2,200. Or Pramod, Devendra and bank, they will take in the ratio of 1:1:3 ratio. In this ratio, they will take the funds. Because in this ratio, they initially brought in the funds, right? See, 1:1:3. So 1:1:3, they will take the funds also. Option number C. This is option number B. Option number C. First of all, we will have to pay to the bank how much? 3,000. Whatever remains. What is the remaining amount? Remaining is 1,200, which Pramod and Devendra will take equally 600. 600. Tell me, which option do you think is the most logical option? A, B, or C? Tell me, guys, come on. C. Why C? Because now read this line. Now read this line. Equity, read this line. It's the residual interest. Residual interest in the net assets. In the net assets. After paying off, after paying liabilities. What is my liability? I have taken a loan from the bank. That is my obligation. That is my liability. So first of all, from this net assets, I will pay off to the bank. Whatever is the amount that remains is called as equity. Is called as equity. Now that will be distributed to the equity holders, equity shareholders. Now tell me, are you understanding the meaning of the term equity? Are you understanding the meaning of the term equity? This is not correct. Is it clear the meaning of the term equity? Come on, guys, please tell me. Wonderful, wonderful, wonderful. Now comes income and expenses. What do you mean by the term income? What do you mean by the term income? So whenever there is a, understand, incomes are the receipts. Incomes are the receipts. It might be operating income from the business, or it can be non-operating income from the investments that you have done. Okay, it can be an operating income from the business, it can be a non-operating income. Okay, now expense. Expense, it can be an operating expense for the business, it can be a non-operating expense for the, you can say, finance costs, you can say finance costs. Okay, you can say any other, you can say cost of sale is an operating expense, distribution cost is an operating expense, admin cost is an operating expense. All these are operating expenses, right? So now you have some non-operating expense, by the name you can say loss on sale of assets, by the name you can say finance costs. All these are non-operating expenses. Okay, non-operating expenses. So it can be income, there can be income, there can be expense. Though when I'm teaching you the chapter of, when I'm teaching you the chapter of conceptual framework, okay, I will revisit these topics and explain again the meaning of asset, liability, equity, income, expense. The definition of equity and income and expense, which I have told now, is a very basic one. Okay, is a very basic one, but the definition of income and expense, which I will teach you in the conceptual framework, will be very detailed one as per the conceptual framework. Okay, now tell me, as I have told, the intent is to make you familiar. Is it clear, everyone? Come on, guys, tell me. Is it clear, everyone? Come on, guys, tell me. Now I have given you the basic format of statement of financial position, the basic format of statement of profit and loss. Okay, it's basic format of statement of profit or loss. Just let's run through it. Let's run through it. See what I recommend all of you, all of you, whether you are an FR student or an SBR student, whoever you are. Okay, what I recommend here is, understand, guys. Let's suppose you sit here and study. Please paste the format of SOFP. Please paste the format of P&L in just in front of the place where you study. I want you guys to daily have a look at it. Daily. This format should be fixed in your brain like anything. Okay. But yes, when we are studying in the class, we will have to regularly visit this format. We will have to regularly visit this format, and it will automatically get fixed. But still, as an effort from your side, also do the same. Now, understand. So, SOFP has three components. SOFP has three components. I'll explain here. Statement of financial position works from the basis of accounting equation. Okay, what is accounting equation? It is equals to asset is equals to liability plus equity. Okay, so three components: asset, equity, liability. Assets. Now, assets can be of two types. One is called as non-current asset, another is called as current asset. Okay, so can you give me the examples of non-current asset? Yes, property, plant, equipment, investment, property, investment, property. Then comes right of use assets. Then comes financial assets. Then comes deferred tax asset. Then comes deferred tax assets. Then comes other non-current assets. Now, whichever non-current assets are there, if they are not able to fit in this criteria, that comes under the other non-current assets. Okay, what are current assets? What are current assets? Current assets can be inventories, then it can be financial assets. Now, financial assets example, you can say trade receivables, cash or cash equivalents, then comes other current assets, so these are the assets. Okay, then comes equity. So under equity there are two things that comes up. What? Equity share capital and other equity, other components of equity. Guys, tell me, are you able to understand this SOFP? Just see here. SOFP has three elements again: assets, equity, and liabilities. Now, assets are of two types: non-current assets and current assets. Now, under non-current assets, we write property, plant, equipment, investment property, capital work in progress, investment property under development, right of use assets, intangible assets under development. This is called as financial assets. Other non-current assets. Then comes current assets, which has inventories. Then financial assets has trade receivables, cash and cash equivalents. Then comes other current assets. Comes to equity, it has two components: share capital and other components of equity. Then comes current liabilities. Again, liabilities are of two types. Non-current liabilities and current liabilities. Non-current liability will have some long-term borrowings, long-term provisions, deferred tax liability. Current liability will have trade payables, it will have bills payable, it will have loans payable, short-term borrowings, it will have current maturities of long-term payables. Okay, so all these things will be there. Okay, then other non-current liabilities and other current liabilities will be there. So this is the format of SOFP, statement of financial position. Let us map it with the syllabus. See, we have a standard on property, plant, equipment by the name IAS 16. We have a standard on ROU by the name IFRS 16. But we have intangible assets IAS 38. We have investment in equity instruments. We have a topic by the name financial instruments. Inventories IAS 2. Trade receivable financial instruments. Okay, then cash and cash equivalents IAS 7. Share capital financial instruments. Long-term borrowings financial instruments. Deferred tax liabilities income tax under IAS 12. Okay, long-term provision. Okay, now it is under IAS 19, which is not there in FR but there in SBR. Trade and other payable under financial instruments. Short-term borrowings financial instruments. Current maturities financial instruments. Current tax payables IAS 12 short-term provisions you can be under from multiple standards it can come. Okay, now, so this is how we have mapped to our syllabus. But remember, this statement of financial position is as at a particular date, as at a particular date. Come on guys, tell me, are you understanding the format of statement of financial position? Are you understanding the format of financial position? Come on guys, tell me, is that fairly clear to all of you, the financial statements? Is that fairly clear to all of you, the financial statements? Wonderful. Moving on to the next part. Format of PL and other comprehensive income. Format of profit or loss and other comprehensive income. Understand? Now, as you can see, it is for the year ended. It is for the year ended. Now, it starts from what? It starts from revenue, cost of sales, and then comes a gross profit. Then comes a gross profit. Then we reduce some operating expense by the name of distribution cost, admin cost, which gives me profit before tax. We have to adjust tax expense. So now for revenue, we have a standard called as IFRS 15. For finance cost, financial instruments, tax expense, IAS 12. Okay, now this gives me the profit after tax. This gives me profit after tax. This gives me profit after tax. Now comes other comprehensive income. Under other comprehensive income comes revaluation gain, okay, all this comes. And then when we add profit after tax and other comprehensive income, we get total comprehensive income. We get total comprehensive income. But now understand, my dear friends, okay, there arises a challenge. There arises a challenge. See, the profit and loss statement is divided into two parts. One is called as PL and another is called as OCI. How will we get to know that which income or which expense we have to recognize in other comprehensive income and which income expense we have to recognize in P&L? How exactly will we get to know? How exactly will we get to know? Okay, so understand, my dear friends, this other comprehensive income, understand the intent. See, we know what is P&L. We very well know what is P&L, which we are studying from class 11 itself. We are very well studying what is P&L. Okay, but what is this other comprehensive income? I believe FR students do hear it for the very first time. I believe FR students will be hearing it for the very first time. Come on guys, tell me, yes or no? FR students, come on guys, tell me. You must be hearing it for the very first time. There might be students who will be hearing this for the very first time. So understand, ideally other comprehensive income, the intent of the accounting standard setting board was just to make it for disclosure purposes. Why? So basically, see, whenever there is a movement during the year, we have to account for it somewhere. Okay, whenever there is a movement somewhere, okay, basically whenever there's an income or an expense, a gain or a loss, whenever there's a gain or a loss during the year, okay, we have to recognize it in P&L. But there are certain gain or loss, okay, there are certain gain or loss which is unrealized, and we are not sure that when exactly are we going to realize that. We are not sure that when exactly are we going to realize that gain. Let's suppose I purchased this mobile phone for my personal use. Okay, I purchased this mobile phone for $10. I purchased it for $10. Now what happened? I saw that in the market the price of this mobile phone increased. So in my financial statements, in my SOFP, I increased the value of this mobile phone. Tell me, I increased it to $12. This gain of $2, because see, understand, what is the entry which I will pass for this? When I'm increasing the value of my mobile phone, what is the entry which I'll pass? Mobile phone account debit to gain on mobile phone. to gain on mobile phone, right? Because I have not paid cash for this. It's a gain for me. It's a gain for me because the value of my asset is increasing. Because the value of my asset is increasing, right? Now, tell me, am I going to realize this gain of $2 in the future? Will I be able to realize this gain anytime? No. So can I say it is my income which will go? Can I recognize it in P&L? This gain of $2, shall I recognize it in P&L? Recognizing this gain of $2 in P&L, don't you think it will misstate the P&L? Why? Because this gain of $2 is not actually a gain. It is not actually a gain. It is not actually a gain, right? So now the standard setting body, what they did is they told that, okay, this is a gain which we have to disclose to our investors. So they included a new component in P&L by the name other comprehensive income. Okay, other comprehensive income means whatever is left gets to other comprehensive income. So now, but again, there arises a challenge for the standard setters is what item shall we place in other comprehensive income? Because if the standard setting body leave this, that recognize this gain or loss to P&L or other comprehensive income basis the judgment of the accountant, means if the accountant had a choice to decide, shall I take this income or expense to P&L or shall I take this income or expense to other comprehensive income, don't you think the accountant would have used P&L and other comprehensive income according to their requirement whenever they wanted to increase profitability? Whenever they wanted to increase profitability, okay, they will post all expense in other comprehensive income and all profit in P&L. Whenever they want to reduce profitability, so what they will do, they will post all expenses in P&L and all incomes in other comprehensive income. So they will misuse it. So now standard setting body knew this fact. So now what they did is they told, okay, all the income and expense during the year will go to P&L. All the income and expense during the year will go to P&L except for few line items which they have specified, which they have specified, which they have specified, which will go to other comprehensive income. So there is a specific list of items which goes to other comprehensive income. There is a specific list of items which goes to other comprehensive income. To give an example, it is revaluation gain on property, plant and equipment. It is revaluation gain on investment property. Okay, it is investment revaluation gain on investment property. So not investment property, it is intangible assets. Okay, property, plant and equipment, property, plant equipment, intangible assets. If there is a revaluation gain on investment property, it goes to P&L, not other comprehensive income. Why? Because investment property we will sell and realize the value. Hence, it goes to investment property here. I believe you might not be knowing what is the meaning of investment property. No, don't need to worry. You are not required to worry at all from that perspective. When I come to the chapter of investment property, I will teach you everything in detail. As I have told, whatever I am teaching in the class is just forming the base. I will be teaching each and everything again in the relevant chapters. Okay, now tell me guys, is the format of P&L clear to all of you? Is the format of P&L clear to all of you? No, there are other items also, Pramod, but I don't want to give you a list right now, because if I give you a list right now, you will get confused. Okay, you will get confused. So I don't want to give you a list right now. Revaluation gain I wrote because you guys are familiar with this term, so I just wrote the term. Okay, because if I start giving you the terms now, you will get confused. Still, if you want me to, I'll just give you the basic terms. Okay, understand? Whenever there is an income or expense during the year, okay, understand, under OCI, you write revaluation gain on property, plant, equipment, and intangible assets. You write exchange gain or loss on foreign operations. It is there in SBR syllabus only, not in FR. Okay, uh, actuarial gain or loss, IAS 19, as per IAS 19, it is there in, as per IAS 19, it is there in SBR only, not FR. Okay, it is there in FR and SBR both. Okay, now cash flow hedge, it is there in SBR only. Okay, rest everything goes to P and L. There are other items also. Okay, but I'm not writing this. Okay, just to give you a basic understanding of it. There are other items also. Is that clear, everyone? Is that clear, everyone? Okay, wonderful. Now comes concept of time value of money. Concept of time value of money. Come on, guys. Is it clear to everyone till here? Can I move on to concept of time value of money? Please give me a heads up. Is it clear to everyone till here? Can I move on to concept of time value of money? Wonderful. Let us move towards it. Tell me. I'm telling to all of you. I'm telling to all of you that I want to give you $1,000. Tell me who needs it. I am planning to give $1,000. Who needs it? If you want, you tell me. I am planning to give $1,000. Those who need it, please write in the chat box. But now I'm giving you two options. I'm giving you two options. Okay. Option number one, I'll give it right away. I'll give it right away. Option number two. Option number two is I will give after year 1 or year 2 years. 1 year and 1. I will give it at year end 1. But what I'm saying is here if I give, I'll give $1,000. Here I'm giving $1,000. I'm giving $1,000. Okay. Now tell me which one do you want to? This is option number A. This is option number B. Which one do you want, A or B? And it's a promise that I will give. Okay. It's don't say that, sir, I need option number A. Why? Because you might default. You might default. No, I will not default. I will promise. I will not default. I will not default. If I will make a promise, I will not default. Tell me. Which one do you think? A or B? Today. Why? Why do you want today? Joseph, Ammu, Devendra, Yamini, all of you, please tell me. Why do you want it today itself? I am promising that I will give you. Take it after 1 year. No. Why today? Why today? Why not after 1 year? Value is higher today. Okay. Okay. So basically why today is, sir, if you give me the money today, what I will do is I will take 1,000. I will take 1,000 today. I will invest in the bank. I will invest in the bank now, and I can earn investment income for this. Okay. Let's suppose the rate in the market is 10%. So here for this time I will earn a interest of 10%, that is 100, and here it will become 1100. You were giving us only 1000. Oh my god, this is called as time value of money. This is called as time value of money. Okay, so now, okay, now tell me, I don't want to do any partiality. I want to redesign this option. I want to redesign this option in a manner that both the options are equally equivalent. They are equivalent. Both the options are totally equivalent. Tell me, how can I do that? So what I can do is In that case, I will have to change. I will say that if you take at year end 1, I will give you 1000. I will give you 1000. But if you take it now, I will give you how much? 1000 divided by 1.1 is $909. Now tell me which one do you want? A or B? Now tell me which one do you want? A or B? Assuming that you can earn only 10% from the market. Assuming that you can earn only 10% from the market. Tell me. Now tell me which one do you want? A or B? Yamini, why are you telling B? Because see, now you have become, you can say basically at par, because if you take 909, you will earn the interest and it will become 1000. Even I am giving 1000. So you are at par level now. Both are same. Both options are equally good. Now you say, sir, whatever you want to give no, sir, no issues. Whatever you want to give, I am fine. You want to give now? Okay, give me now. You want to give after 1 year? Give after 1 year. So now this is called as time value of money. This is called as time value of money. Are you understanding this point? Now, in the exam or in our discussions going forward, okay, the calculation of present value, the calculations of present value can be asked in multiple forms. Okay, now basically, if I have to summarize the entire ACCA, FR, or SBR syllabus, I can very well say that there can be three possible cases. There can be three possible cases. Case A, present value of a lump sum amount single lump sum amount, present value of a single lump sum amount is case A. Case B is present value of same amount at same intervals. Same amount at same intervals. Case C, present value of different amount at same or different intervals. At same or different intervals. Or different intervals. Let me explain how to calculate the present value in each of these scenarios. Understand? Case A. Let's suppose, what is the present value of $5,000? Guys, for all the cases, I am assuming the rate of interest is 10% per annum. Okay, this is the basic assumption that I will have. Now, 5,000 I have to pay at year end 5. What is the present value at t equals to 0? Tell me, how will you calculate the same? So can I say that let's say the present value is X. Okay, now how to calculate? So using the simple and the compound interest formulas, how to calculate the future values? So can I say X plus 1 plus R by 100, X multiplied by 1 plus R by 100 to the power N is equals to 5,000. Right? So I can say X is 1 plus R is 10, rate is 10 by 100 to the power N is time 5 is equals to 5,000. Can I say it? Now, can I say X is equals to 5,000 divided by 1 plus 10 by 100? Can I say it 1.1, 1.10 to the power 5? Can I say it like this? Tell me guys, please. Now comes the question, sir, how to solve it? There is a calculator trick. Tell me, how many of you want to know the calculator trick? Come on guys, tell me, how many of you want to know the calculator trick? So all of you, please take your calculator. In the calculator, write 1.10. See, Can you see 1.10 in the calculator? Can you see 1.10 in the calculator? Okay. Now, write, so in the calculator trick, I'm writing here calculator trick. Calculator trick. Okay. So this is called as discount factor. This is called as discount factor. Discount factor 1.10. Okay. Then press divided 2 times. Always. Then press divided 2 times. And then press equals to n times. Please, can you do that? So I wrote 1.10 divided. Now how many times? 5. So I have to press equals to 5 times. 1, 2, 3, 4, 5. So what is the figure that came? It arises 0.6209. Now multiply this with the amount. How much? 5,000. So what is the amount? Tell me. Multiply by 5,000. It is called as 3104. 3104 is the present value. This is your present value. Tell me guys, is it clear everyone? Are you understanding this? Are you understanding it? Come on guys, please tell me. Is it clear everyone? This is your calculator trick. Amu, please take your calculator, write 1.1, the discount factor. Write 1.1, the discount factor. After writing the discount factor, please press divided 2 times. Divided. Then press equals to n times. What is n? N is 5. So press equals to 5 times. 1, 2, 3, 4, 5. What is the figure that you can see on the screen? What is the figure that you can see on the screen? What is the figure that you can see on the screen? It is 0.620921322305. But take only till 4 decimals. Take only till 4 decimals. 0.6209. So 0.6209. This is called as present value factor. This is called as present value factor. Multiply it with 5,000. Multiply it with 5,000. So basically I can say 5,000 multiplied by 1 divided by 1.10 to the power 5. So I can say now that the value of this is how much? 0.6209. 0.6209. So 5,000 into 0.6209 comes to the present value. Is it clear everyone? Is it clear everyone? Okay, now this is case A. Now moving on to case B. Now, but in case B, what happens? Again 5,000, but the C, what happens? It is T equals to 0. 1, 2, 3, 4, 5. Here you have to pay 1,000. 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 So what is the present value of all? So applying the same above principle, can I say present value is equals to 1,000 divided by 1.1 for this one? For this one? For this one, it is this one. Now, for this one, we can say plus 1,000 divided by 1.1. For this amount, we have to calculate the present value for 1 year and 2 years. So divided by 1.1 to the power 2 plus 1,000 divided by 1.1 to the power 3 plus 1000 divided by 1.1 to the power 4 plus 1000 divided by 1.1 to the power 5. See, understand, this amount we have to calculate the present value for 1 year, so to the power 1. This for 2 years to the power 2. This for 3 years to the power 3. This for 4 years to the power 4. This for 5 years to the power 5. Right? Now can I say it one thing? I will take 1000 as common, and can I write it this way? 1 divided by 1.1 plus 1 divided by 1.1 to the power square plus 1 divided by 1.1 to the power cube plus 1 divided by 1.1 to the power 4 plus 1 divided by 1.1 to the power 5. Can I do it this way? 1000 multiplied by. Tell me guys, come on. Now, what is the calculator trick to solve this one? Do you want to know the calculator trick? Do you want to know the calculator trick? Come on guys, please tell me. Who wants to know the calculator trick to solve this one? Please guys, tell me. Do you want to know the calculator trick? Come on guys, tell me. Come on, come on, come on. Okay, now understand. So you have to write again the discount factor, the same process. So you have to write the discount factor. In the calculator, write discount factor. What is the discount factor? 1.1. Then press divided 2 times. Then press equals to n times. Okay. Then press GT, not GOTO, not go to. Press GT. There will be a function called as GT in your calculator. Where it is? See, in my calculator, can you see this GT function? This GT. Can you see this GT? Can you see this GT? Please tell me. This is called GT. Okay. Now, right here, come to the calculator again. 1.1 divided equals to for 5 times, n times. 1, 2, 3, 4, 5. Press GT. And what the figure that it gives? The figure that arrives is 3.7908. Go till 4 decimals. Okay. So now what is the amount? So it is 1000 multiplied by 3.7908 multiplied by 1000. That comes to 3790.80 is the present value. But understand, we can apply this formula only when the amounts are same and there has to be the same interval, same amount, same interval, same amount, same interval. See here, present value of same amount at same intervals. Okay. Now tell me guys, case A and case B is clear to all of you? Is case A and case B clear to all of you? Is case A and case B clear to all of you? Moving on to case C. Moving on to case C. Now under case C, what happens? This is t equals to 0. At year end, understand, 1, 2, 3. Here you have to pay 2000, 3000, 5000. Now tell me, can we apply the same principle here? Can we apply the same principle here? No. Why? Because the amounts are not same. Amounts are different. Amounts are different. So how to solve this type of present value? How will you calculate this present value? So you have to calculate it individually for this one. You have to calculate it individually for this one. You have to calculate it individually for this one. You have to calculate it individually for this one. And then you have to add everything. And then you have to add everything. So let us calculate it individually. Let us calculate individually. So it will be 2000 divided by 1.1. It is 1818. This one is 3000 divided by 1.1 divided by 1.1, which comes to 2479. And this one will be 5000 divided by 1.1 divided by 1.1 divided by 1.1. Okay, it is 3756. Okay, add all 1818 plus 2479 plus 3756. That comes to 8053. This is your present value. Tell me guys, are you understanding it? When you have different amounts, this is what is the scenario that applies. Is it clear to all of you? Come on guys, please tell me. Is it clear to all of you till here? Come on guys, please tell me. See, in the calculator given in the ACCA practice, in the you can say the digital calculator that is given, okay? There might be, there might not be, okay? Though ACCA is changing the ACCA practice platform as well, okay? But understand, in the calculator which you get, you can have this GT function. You can have this GT function. Okay? You can definitely have it. Now, so this is all about the basics of ACCA FR and the SBR paper. Okay, this is all about the basics of ACCA FR and the SBR paper. Okay, I believe I have cleared the basics, but still, if you have anything that you want to discuss with me, definitely the stage is all yours. Come on, guys, tell me. Yes, it is very well allowed. You have to take the calculator to the exam. You have to. Okay, okay. That's all for the day, guys. That's all for the day. Okay, if you are looking for enrollment in ACCA FR and SBR, okay, then you can reach out to my team. The contact number and details are given in the description box. Okay, it is given in the description box. Yes. Okay, now the notes will be uploaded on the Google Drive. Okay, so by tomorrow all the functions you will get the access by today itself. Okay, for all the students who have registered with us, you will get the access by today itself. Okay, some of you would have got, some of you will get it by today end of day. You will definitely get the access. Okay, we'll start uploading the lectures also from tomorrow. Okay, and you will get to see the lectures also from in the portal. Okay, and yes, the notes will be uploaded on the Google Drive, the link of which I will share you in the group. Okay, in the group. I believe all of you would have been added to a WhatsApp group. Okay, where you can get this notes. Is there any situation where both IAS and IFRS is getting applicable? No, no. For a particular transaction, there can be either IAS or IFRS, not both. Okay, chalo. Bye bye. That's all for today. See you tomorrow at 8 p.m. same time. Okay. See you tomorrow. We'll start studying the standards from tomorrow. See you tomorrow at 8 p.m. We'll start studying the standards from tomorrow. Bye bye.